Over the past 24 months, Warren Buffett has been selling Berkshire's holdings of Wells Fargo. According to the recent 13F filing, Buffett sold off 7.8% of its holdings of Wells Fargo in the third quarter of 2019 and even more in the fourth quarter of 2019. Buffett continued dumping his stake in Wells Fargo in the first half of 2020. By the end of the second quarter of 2020, Berkshire owned just 238 million shares, which is down significantly. At the same time, the 13F of the Daily Journal Corporation came out. According to the 13F for the Daily Journal, none of its holdings in Wells Fargo, which is the second largest holding, were sold. Now, the interesting part is that Charlie Munger, who is Warren Buffett's longtime business partner, sits as chairman of the Daily Journal. Moreover, Charlie Munger manages the portfolio for the Daily Journal by himself. So, is Buffett correct by selling Wells Fargo, or is Charlie Munger correct by holding on to Wells Fargo? Well, let's take a look. Charlie Munger and Warren Buffett have worked closely for the past several decades, sharing investment decisions and ideas and making some of the most significant decisions at Berkshire Hathaway. There's been a great deal of speculation about why Buffett decided to sell Wells Fargo. Whatever the reason, Buffett has made the decision to significantly reduce exposure to the bank. Wells was once one of the largest holdings in Berkshire's portfolio. Buffett had repeatedly praised Wells Fargo over the years, and he's always said when he buys a stock, it's forever. The fact that Buffett is selling suggests that Wells Fargo has made some significant mistakes in his opinion. Munger has not followed the same path. This circumstance seems to highlight a couple of differences between the two investors' strategies. Since about 2008, Munger has only owned about 7 investments. Berkshire, under the direction of Buffett, has bought and sold significantly more. Munger is much happier to sit on his hands and do nothing. On the other hand, Buffett may be more concerned about reputation now that he is closer to the end of his management of Berkshire. But it is interesting to note that these two billionaire investors are following different paths with Wells Fargo despite their history together. Now, let's take a look at Wells Fargo with our charts. And we're now looking at a 20-year monthly chart on Wells Fargo and Company, and the symbol is WFC. For disclosure purposes, I do not hold any shares of Wells Fargo or Berkshire Hathaway. Now, looking at the price chart, the important part here is that deep dive in 2009 and then the deep dive here in 2020. Let's go see here, volume much higher in 2009 versus current time frame. So that could be significant. Looking at the MAC, the things that are important here is that this dive down is much deeper than it was in 2009. Now the top was there, at least by the MAC, in 2014, 2015. So we've had several years of a downtrend for Wells Fargo. Is the downtrend over? Who knows? Into the histogram, much the same. Again, price rate of change looks very similar to the MAC. Is this bottoming and basing here? Possibly. Same thing in the relative strength index. Looks like the index has moved out of the oversold territory, so could be a bottom and a base here. Moving then into stochastics, much the same, and echoed by the Williams. Back on up here. One could argue that Buffett was right because it's sold off all the way down here. But maybe in the long term, Munger could be right if he holds on and if there's a recovery. So, if you're brave enough, let me know in the comments who's right, who's wrong. And for today, that's ChewDog Charts. Thank you.